traders, hello warriors. Very wild environment we have going on geo-wise. I haven't experienced this in my lifetime with what's happening geopolitically and what we have going on domestically and the Fed. So many moving parts. No better guy to talk to about what's going on that can filter out the noise and just see opportunities in the market. So welcome back to TradeGATEHub, Andy Constance at Damp Springs. Good to have you.
You too. Great to be here, Dale. I'm looking forward to the conversation.
Okay, so I thought I would start. On your Twitter, you have a little bit of where you were, point A to B, and maybe just give our viewers a little bit about the road you took to becoming a very good trader and a great macro guy.
Sure. I started at Solomon Brothers, a large investment bank, notable large trading firm, in 1986, and immediately a year later was on the Brady Commission as an assignment to represent Solomon Brothers to see what was happening, to investigate what happened during the 1987 stock market crash.
Wow.
I was very junior at the time, but every other firm, Goldman, Lehman, Merrill, JP Morgan, and Morgan Stanley, all sent senior people, and Tudor sent their head of research. And so I got to sit with them and help them because they didn't know how to operate spreadsheets, and look at what the most notable thing that's ever happened in markets, the
Yeah.
1987 stock market crash. What happened? So that was
Yeah.
got my thirst to start trading, and I joined the convertible bond desk at Solomon Brothers, and then worked there, ran that desk by 6 or 7 years, and then moved to the equity derivatives desk and ran that desk for another 9 years. And at the end of my 18-year stay at Solomon, trading only equity and mostly more complex stuff, I decided to start a hedge fund with a couple of peers who were rates traders. And that worked out fine. Our partnership didn't. And so we closed that in 2007. But it was very successful, got to be about $3 billion, decent returns, not great. And we closed before the financial crisis, thankfully. We reopened with a narrower set of partners right as the financial crisis got started. And that really didn't take off because no one was allocating money at the time. And then I was on the sidelines during the financial crisis and decided that I knew a lot about equities and a lot about volatility and a lot about markets and hedge fund trading, but I had really done nothing in macro. And so I decided to join Bridgewater Associates, which is, in my view, the greatest macro firm
Yeah.
ever, and worked there for a little over 3 years and really just adored it. Culture didn't fit me, but I learned everything I know about systematic macro from the best place on earth. And then I worked at Brevin Howard and learned how a spectacular macro firm that is purely discretionary operates. And,
Okay.
after 4 years, I decided that it was time to leave Brevin, and I wasn't making any impact anymore. The company had unfortunately shrunk to significantly. Since then,
Well, the baton death march in the financial services industry that we've all
right.
lived through, right?
Right. Thankfully, Brevin's done very, very well over the last few years. And so what they did is they sponsored me as a research provider for them
Yeah.
and allowed me to build a business for other major hedge funds. And so that's what Damp Spring is. It's a hedge fund advisory, macroeconomic strategy firm that provides research and calls to their major hedge funds on the planet. And along with that, I started a Twitter presence about 4 years ago with 100 followers. And what I had to say caught on, and people seemed to like it. And I now have a number of them as clients. And so, that's what I'm doing now.
Yeah, and also Andy is a CNBC contributor, and I caught you about a month ago right before, right after the Fed, and your negative bonds. We'll get to that. That was a great call, Andy, up there. I guess you saw the skew there, and I want to talk about it. You talked about they didn't know how to use spreadsheets, so uh, that was a long time ago. So, what do guys like us need now for the young people to bring to the table? Is it coding? What's the thing that you need help with now, like the guys that you helped did many years ago?
Yeah, so I think this is the same thing I offered people that were older than me at the time I started, and it was um, um, useful to them. It wasn't the technology per se. Anybody can be a little better at coding,
Yeah,
use the various tools available, including AI tools, than us old folks. But um, what I think happens, and this is something I really noticed at Bridgewater that was somewhat unique to for them, but also very consistent with how I operate, which is the best thing a young person can bring is curiosity
okay.
and the discipline once you've asked your question to listen carefully to the answer and then go off and confirm or come up with that answer for yourself with data, with history, with whatever it takes to confirm the answer to that question, or come back
Refute it.
come back with another question that actually might challenge the more senior person to think about things they're missing. And so, good questions, not annoying. Hey, you could have Googled that, or you could have done it in a LLM. Good
Thoughtful.
question, thoughtful questions, and then the discipline to go back and do your own work to confirm the answers you're given. That sort of critical thinking um, is what I look for when I look for junior people at this stage. I'm not doing any hiring, but I am working with one particular guy who's fantastic that has all those skill sets. And, and at Bridgewater, the whole firm was like that. And I think that's the way to build a healthy, moving forward and improving organization.
So, we're going to talk markets, but everyone listening, new or 5 years, maybe even 10 years in the industry, what you're hearing is what guys and companies look for, and it's the passion and drive and the ability to seek your own answers and collaborate, know how to collaborate. Great career advice for people to start off the show, Andy. Really good. All,
Thanks.
all right.
So, by the way, speaking of CNBC, I don't want to leave that.
You could be
I don't
on
know when
today.
this will be broadcast. Is this live or
Yeah,
or?
it's live. We're
Oh,
live
okay. Well,
and recorded.
later today at on Fast Money, I'll actually be on CNBC to talk about the bond market. But you guys will get a
Uh,
preview.
we're scooping CNBC. That's a headline right now. So why don't we talk about your style and how you see things and skew and I read about you combine an alpha and a beta strategy, and you have something called the Delta strategy smart beta. Uh, and that's what you use personally. So can you explain that?
Yeah, I think the
Okay.
most important thing that anyone can come away from this who is a retail investor at home or even a professional investor trying to manage their own money is the only truly free money in markets is owning a diversified portfolio of stocks, bonds, commodities, gold, not only domestically but internationally. Um, and owning it forever and owning it for 20 or 30 years. And that is, if you take away one piece of advice from me, that is what everyone should have. Unfortunately, it's extremely boring, and you're not going to get
Okay.
rich in the next few years doing that, but you'll outperform inflation. You'll earn a decent real return. So your ability for your savings to grow faster than your purchasing power falls, will sustain you. And
Okay.
anybody can do it cheaply. And that's what I call beta.
Okay.
Alpha is trying to take money from guys like us. There's nobody, when you try to time markets, which the rest of this conversation will all be about alpha. But when you try to time markets, you are competing. It's a parimutuel system. Every bet that you make, somebody else is taking the opposite side of that bet.
That's right.
With beta, you get to buy stuff that issuers like the government, like the treasury, like commodity producers, like um, 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 what am I
They're
missing?
not going to come after you.
They're not trying to beat you in the markets. They're just trying
Right.
to raise the money they need to operate their business or pay their bills or sell fund the government, all those things. Alpha is just all of us wise guys and a bunch of people that are probably not so wise, and certainly most who are way wiser than me are um, trying to steal each other's money. And that's extremely hard. Now, I do this for a living, for as a profession, and every morning I know that there is a very good chance that I do not have enough to compete in this market, enough
Okay.
edge to compete in this market. So every day, full time, 24/7, and even practically as soon as I wake up and until I fall asleep, all I do is think about markets and research and try to get better every day. And I don't know if I can even beat the markets. I really don't. My track record's good, but you know, everybody's, I could have been a flip 10 coins in a row, and 18% of us are going to get 7 out of 10 right just by luck. And so track records don't tell you that much. So that tells me that most of you at home shouldn't be speculating on markets
Yeah.
unless you have an edge. Now, I think I have enough of an edge that I do allocate a significant portion of my beta portfolio to in a portfolio that I call alpha, that is uncorrelated. It's neither long all the time or short all the time. It's over time, it's basically neutral to the market. And that is supposed to beat cash and enhance the return of my overall portfolio of alpha plus beta in a lower risk way than levering up on my beta portfolio. And so that's what I do. And that's what Bridgewater recommends to its clients to do. And you'll see people like Corey Hoffstein,
Bob Elliott.
Bob Elliott, and many others who are talking about adding to your beta portfolio portable alpha. Cliff Asness talks about that. And it's all the same thing. It's you the job of an investor is to be long. And then the next job and a secondary job is to add diversified sources of alpha that beat cash.
Okay. All right. So, I'm going to be talking, like you said, about alpha here, and uh, I'm not sure what was the date of the Fed meeting. It was September.
17th, I think,
Yes,
maybe
right
the
here.
18th.
Yeah, here or here. Okay, the half point cut. You were on CNBC before the cut, weren't you? Or was it
Uh,
just after?
I don't recall, to be honest, what day
Okay.
it was, but
Well, I know it was near here,
yep.
and they asked about RIS S&Ps, and you weren't short S&Ps. You thought that the market had priced in too much easing. That was a great call, Andy. And we've pulled back quite a ways. In fact, almost back to a breakout level around the 93.5 level. So, are you viewing it now that I'm assuming you covered your shorts, or are you still short?
Um, so trading interest rates depends on a lot of things. Obviously, there's many different interest rates you can choose. I at that point, I was short 2-year notes, 10-year notes, and 30-year notes.
Okay.
So I was short
Across
everything.
the board. Yeah.
And so what I think is important to notice is that at that point, after the Fed cut 50, immediately the front end of the yield curve began to rally, which had rallied already, rallied even further. And it did because the expectation got priced in about 82% chance that they were going to cut another 50 in each of the successive next meetings.
Right.
Okay.
Yeah.
And that was a call to be short 2-year notes. Now, at the same time, my view on the economy, which has been basically the same for 4 years, is that we were going to have a higher for longer, meaning stronger growth, higher inflation above target for a long time, continues to be my strong view. And by the way, is why equities continue to outperform bonds, because a strong economy is better for equities than it is for bonds. And I get a lot of grief because I'm often short equities, but shorting bonds has way outperformed any losses taking shorting equities. So what's
Sure
important to
has.
know is that you have this strong underlying economy, and that if you were going to get the cuts that were priced in, the economy was almost certain to respond, and still, by the way, is likely to respond, because we've been expecting an easing since probably June. We've been expecting, everyone has been bearish on the economy, expecting the jobs reports to come in and expecting disinflation, further disinflation. So the whole market is stimulative. And then the Fed cut 50, and then each of the members was continued to be dovish. And so all that means is that you're going to get a steepening. And so that made
Yeah.
me add 10s and 30s to my short.
Got you.
And now the question is, what's next? And what's next is currently 2 years, SOFR, Fed funds futures for January are pricing in 48 basis points of cuts. So even less than 225s. All of a sudden, a combination of a revision of the GDI, which is the opposite side of the GDP, such that the whole bear case of the gap between the GDI and the GDP went completely away. And then Powell at NABE on 9:30
Yeah.
in his remarks specifically said the GDI revision up is a big deal. He said it takes away one of the downside risks to the economy. And that's
Like the NFP did last week.
and then the NFP, so you have these two forces. You have the GDP. So what determines cuts? GDP, unemployment rate, inflation rate. And so the GDP got validated by this revision and surprised the heck out of Powell. So he started being more cautious projecting rate cuts. Then you had the NFP that handles labor. And now all of a sudden, labor sentiment has gotten completely turned around to that's a strong labor market, something I've always thought, but it's now confirmed and market pricing has changed. And we get inflation tomorrow. And so all three of those things, two out of the three of those things that reverse the course of bonds happened. And so now the question is, where do you buy bonds? Not where do you sell
Yeah.
bonds?
That's okay. All right. So you're now leaning towards looking for a reason to buy these things.
Right. So my current position is long SOFR Z5, which is priced at exactly the level that the Fed has said they're going to cut through December of 2025. They have a 3.4 dot. It's priced at 96.60. That's 3.4% yield on Fed funds. So I'm long that because it's moved a long way. I was short it. Now I covered. Now I'm long.
Okay.
And I'm
Uh,
still short long-term bonds. But my objective would be to cover if we get a either this we have a $39 billion 10-year auction at 1 o'clock today. We have a 30-year auction. at 1 o'clock tomorrow. We have the CPI tomorrow and the PPI tomorrow. And hopefully I'll get an opportunity to cover into a rapid sell-off to some of those support levels you mentioned.
Yeah, I
So
don't think the 10-year should take out 420. Down here, I thought 4, so it's overshot where I thought we could correct to. But this 420 on the 10-year was so well defined.
sure was.
If
No,
we,
that
if you're, bearish and looking for lower yields, 420 is your line in the sand, I think, on the 10-year.
Yeah, so
But
we agree with that. I'm not a chartist. I don't use this
I
type
know
of stuff, but at the same time, my partner Jimmy Jude has made me aware um
level.
of that level. And from a macro standpoint, we've moved 40 basis points in tens, 40 basis points in 30s, and 80 basis points in twos. It's not the time when you build new shorts, it's the time when you
Right,
look to cover. So
right.
I'm looking for that. On the other hand, because I've already bought twos in the event of a cold inflation print,
Yeah,
the twos are going to respond the most. So I think you get a bull steepener out of the twos, and hopefully that more than covers my long puts on TLT. But again, my positions over the next 48 hours are likely to change and
yeah.
favor covering shorts.
Great to have you here near an inflection point, Andy, because I was talking about that too, and we definitely have had a very tight correlation between U.S. dollar yen and yields. Does that go into the mix of the way you're looking at interest rate moves? What U.S. dollar
Well,
yen is doing?
Well, again, I look at conditions in each country and determine whether there should be pressures up or down on the currencies. Right now, I don't have a strong enough view on the yen to dollar yen or the dollar broadly. It's in a range, and we're now in an
Okay,
adjustment phase where every central bank on the planet, from the PBOC to Japan, is either walking back, tightening, or actively easing. Japan is walking back some of its tightening, and all the other central banks are actively easing, while the US market, the market participants have gotten way out in front of the Fed, and that has walked back. So the Fed is actually tightening. And so that's bullish dollar short term. But, we get a weak CPI. That whole cut cycle mentality isn't going to come back anywhere near as strong as it did when uh, employment and GDI were both looking bad. But we'll come back a little bit and you'll get a bond retracement, and that should be bearish dollar.
okay. So I know you're not a technician, but there you go is the line in the sand in U.S. dollar yen that we held last time at 140. I think we're going to put in the right shoulder that this rally terminates, in the next week or two, like you're looking for to cover TLT puts. We stay under 152, which was the real big area that it broke down of. And we actually could put in a classic head and shoulders top formation. Under 140, yields are going to plummet, right? Do you see
Yeah,
that as a positive? Is that
under 140, I think that was a fairly unique situation. It
okay?
it
Not
required
going to
the Nikkei,
repeat?
it required the Nikkei to drop 25%. Uh, you know, am I bullish JPY? No, I think they're going to have to maintain fairly easy financial conditions for a long time, given their economic circumstance. So I
Okay.
think they'll be slow to hike. And I think the US will be slow to ease. So,
Interesting.
you got to be long USD, JPY. It's just a question of what level. And I just don't have a level at the current level. I
Uh,
think you're right that you could easily top out here, but I'm a buyer on a dip of USD
so
JPY.
you think we'll be eventually be taking out these highs above 160? Maybe.
Unless the US ultimately does do what it takes to kill inflation and you get a recession, yeah, that's the direction we're heading. I
Okay.
wouldn't say the trend is done on USD JPY at this stage.
Okay. And it's easy to see neutral. So the dollar held an important area at 100. and I said there'd be a pop to 102, 103. I don't know what to do with the dollar here. I mean,
Ah,
it could extend back up to 106.
yeah, I mean, again, it's one of those things where Europe and the UK are going to need to ease relative to what the US needs to do, and that's bullish dollar. On the other hand, the euro is on the work I do. I don't use the COT stuff for this. I
Yeah,
use institutional stuff,
yeah,
but I see the euro being significantly underowned by most
under,
global investors.
okay,
It's not at an extreme yet, but I can't be short the euro, below 108-ish in any
okay.
good conscience,
Uh,
even though the economics are pretty supportive of Dixie.
okay, so I have confirmation because 108 has popped out. I have an advantage and an edge. Guys like you give me an edge talking to you, Andy. That's why I talk to you. So that it gives viewers an edge. And a couple of people I've talked to the same day today are talking about 108 euro,
Yeah, and
which can keep,
you're going to get that on a hot CPI number.
yeah. Okay, I know that at times you dabble in precious metals. It's been one heck of a ride, especially higher beta and silver. You have a view on gold because, I've heard you also say, sometimes gold, the right trade is no trade. So I
Yeah.
know you're not always in this. What are you thinking here?
Well, I think it's important to state that, and this came from Bridgewater. I didn't know much about gold at all until working at Bridgewater. Since then, I've spent a lot of time on fiat currencies versus hard money and so on. And I'm a believer and
Yeah,
always own, um,
physical
not physical. Physical's too much of the
risk.
cabin in the woods thing for me. But I have, there's some, but never
Yeah,
would. I don't. If that happens, some guy with more guns than I could ever imagine having. I don't have any guns, but more guns than I could ever imagine having would come and take my gold. So
right.
I'm not playing that.
Yeah,
As
I understand.
as
But
an
so
as an
like,
investment, I think I have more gold than in my beta portfolio than almost anybody.
wow.
So I
Okay.
always own gold in my beta portfolio. On the other hand, we've had a massive run. I think that had a lot to do with this global easing that's going on, and most to do with the de-dollarization of, which is only happening modestly,
Yeah.
but a de-dollarization of some of the places that like gold, like India and China. And there's also been the significant desire to own assets that are portable like this, not portable in that sense, but it's heavy, but allow them to get out of US dollar assets if they're enemies of the United States or its allies. And so there's probably some war premium. All those sort of things are built into the gold price. My friends, uh, um, Tracy at Shy Girl,
Okay.
Nick Giva, and Jimmy all look at the chart and say it's doing nothing wrong. And so it's not something you'd want to short. It's
Right.
something I'm glad
Okay.
I own in my beta portfolio. But in the event that real rates continue to rise and some of this flows abate, gold's going to retrace.
Okay. I'm in your camp thinking, 25. This was really an important breakout. This 25.20. So you know what the market will do. They'll flush under 25.30 for a few days, and maybe we see 24 and a half or so. But bull market it is. You do anything in minors with your
I do not.
alpha?
I
Okay,
do
so
not.
then why don't we talk about what's happening here in equities? And it's funny when we had that break in July, it wasn't Jeremy Siegel who was saying the Fed needs to have an emergency meeting and cut right away, and they didn't have to do anything after
So
that. The
just
mark the
just
market
an
just repaired itself down
amazing
here.
um I can't even say
Uh,
embarrassing for that particular individual.
Yeah.
You know,
Anyway,
I was buying, I never didn't buy it. I was covering shorts. I never covered enough. You know, I ended up
yeah.
relatively flat on that event, but man, that was a very unusual thing that occurred.
The
And
turn, yeah, I mean, this is how it closed
yeah,
on not a great close going home on Friday.
and
And then,
and 3 days later, it was still very choppy before we really took back off. And
yeah, here
you
too,
know,
same thing.
that's a, you know, we've seen a couple, as you said, we've seen a couple of these bottoms. And so, you know, when you look at equities, and I'm short them right now, I have a couple of percent of my AUM and S&P puts in my alpha portfolio. Why? And I'm getting destroyed today, losing like 20 basis points on my AUM. But, you know,
Okay.
so I'm tiny, but at the same time, I'm short. Why am I short? Um, so what's driven equities for the last year continues to be driving equities today, which is very strong earnings growth. And really, more importantly, the expectation of future earnings growth. So it's not the actual earnings that are printing, which are pretty good,
Yeah.
but it's the expectation of future earnings. So that's you know, are we going to earn 300 by in 20 on the S&P in 2026? Maybe, you know, that's what's priced. We're currently at like 245. That's what we earned the last 12 months. So, you know, you're
Okay.
talking about a 20-ish, 25%-ish earnings growth. That is fairly unprecedented if the economy is weakening. So maybe the economy doesn't weaken. If the economy doesn't weaken, you could see $300 of earnings.
Well, I'll
And
tell you what is weakening, Andy. Momentum. And and I'm still in the melt up camp. I think that we could see 6100, which really is just a fulfillment of this structure from the lows we had here. You just added above the breakout, gives you 61. But I look at this as saying, that's pretty negative divergence. So I'm on the hunt to be, to have people try and take my money away.
yeah,
Or,
yeah.
yeah,
And you know, I see that as well. The thing that drives me on this is we're also trading not only with very high earnings expectations, but also fairly high PEs. And you know, you look back to the 2000 peak. Peak PE was around 25. It's now around 22. Now, that brings up the whole question of whether AI can continue to maintain its multiples or not.
yeah.
And what I would say is maybe, but it's already the expectations for that to occur are already in all of these valuations, and so they have to deliver. And it's going to be difficult for earnings to deliver. On the other hand, PEs expand when interest rates fall and central banks are easy. And if the Fed has been able to kill inflation with what they've done to date, and these cuts they have priced in now don't reignite inflation, even though the economy is printing, 3% GDP every single quarter, um, that's a Goldilocks situation, and multiples don't come under compression. And so by the end of 2025, you could easily see, and this is where a lot of targets are.
Andy, what about the 2 months after the election, then we still don't know who the president is?
Yeah,
Is the
and
mar how's the market going to handle that?
and that's why I'm not taking a lot of risk at all. The election to me, seems to be a very consequential outcome, not only for sectors of the equity market, but for the overall economy and our
Yes,
standing around the world and policy around the world.
everything.
And so, given the election is coming, the big message here is you're not supposed to be taking a lot of risk. You're supposed to be owning your beta and not punting a lot. Um, on the other hand, the point you made regarding election uncertainty, I look at the election uncertainty in 2020, and that was a heavily contested election with the possibility, however remote, that
Still being contested.
the person who was the president was not going to leave office.
Right.
And so, and it's still, and people still don't know who the president was. So what happened then? Market ripped.
That's true.
It wasn't a problem for markets in 2020 from the election on, even though the business unfriendly, relatively business unfriendly president was elected and sworn in. The other guy was supposed to be the pro equity guy, and yet
Yeah. Market did fine under
market
Biden.
did fine. Now, of course, vaccines and all the things that were happening in 2020 uh, played a huge role in that rally, but invest in uncertainty as it regards to who the president is not something that I'm concerned about.
Okay. Markets, look, they've been whistling past the graveyard with Ukraine, with escalations in the Middle East. So the market doesn't care. Money goes to where it's being treated best. And being long equities is still where it's being treated best. Here's NVIDIA. I think we're in a blow off stage and maybe we trade 150 or so, but and this was a poster child for the bull run, right, Andy? And
Sure.
it peaked before NASDAQ peaked for the July correction. So it's leading once again. I'd be on the lookout for divergences, momentum divergences, maybe up around 145, 150. So I think we're close to at least some type of correction that could equal what we saw in July.
Yeah, I
Um,
think the interesting thing on that is the VIX.
yeah, I
The
saw
VIX
you were trading it.
and VIX futures more relevantly than the VIX index, though now the VIX index does cross the election. Um, that's been extremely well bid for since really the Fed and even a little before that.
Yeah,
You have to wonder why that is. Obviously, the election uncertainty is one thing, but it also extends out relatively flat out the curve. And so, that measure of stress seems to continue to be well bid,
undercurrent,
which is
right?
just it. I don't have an answer to that,
Yeah.
but it seems to me to be. And then you have all the various wall of worry type / real things that could unpin the market in some way. Um, Speaking of which, on this call, I bought some oil, which we haven't talked about.
Okay. Yeah. So, let's take a look at oil and wrap it there. So I know that you have Stacy doing your oil analysis and trading, but
Wait,
the way
Tracy.
Trace, huh? Tra
Tracy.
yeah.
I think you said
Uh,
Stacy.
oh, okay. Well,
But
old timers.
yep,
Anyway, so, here's the look, and WTI cleaned out all the bulls in here, right?
yep.
And now we're just pulling back. Now we have to clean out all the bears. So long crude, I would never short crude in this environment. And everyone poo-poos that nothing could happen in the Straits of Hormuz. But it's a type of trade that if you're short, you could wake up one morning and it could be painful. So
Yeah, for me, it
go
was a
ahead.
simple thing. I want to be long growth. I know that
Okay.
I'm going to be covering bonds relatively soon.
Okay.
That's like I've been long growth by being short bonds. I'm planning on covering that. If I cover that, I still want to be long growth. And I think oil gets you that. And the big correction that we had, it's down what, $6, $7
Yeah.
in like a week, are assuming the Israeli thing is not going to target the energy complex in Iran, or may not even happen, which seems highly unlikely to me,
Yeah, me too.
and that China's stimulus wasn't adequate enough to ignite the economy there. Um, and so I think being long growth by being long oil is a decent trade
Okay.
here.
Okay. Great to end, wrap it up with a live trade. That doesn't happen on CNBC. Anyway, it could. Go watch Andy today on CNBC, see if he takes partial profits on his long position in WTI. But Andy, God, let's not let as much time pass before you and I talk again. And I really encourage people. Andy's got a great team too. Jimmy's a great technician, and Tracy is really good in the commodity space. I've talked to her for years. So check it out. Go to danspring.com, follow Andy on X, include him in your intelligence gathering, and you too will have a little bit more intelligence when you're coming up with your narratives. I consider Andy one of the best out there. So thank you,
Thanks a
buddy.
lot, Dale. I appreciate that.
All
That's
right. My trading warrior brother at Damp Spring, Andy Constant, and hope everyone enjoyed it. It's recorded too, and catch Andy later on CNBC. See you, buddy. Thank you.